right? So we can go ahead and buy and sell this particular unit that will give us indirect access to these stocks. If you invested 10 lakh rupees in 2012 in a fixed deposit giving you 6% interest rate, in 2022 you would have got 19 lakh rupees. But on the contrast, if you invested the same 10 lakh rupees in US Nasdaq index, Nasdaq 100 index, today in 2022 you would have got 50 lakh rupees. In this video, I'm going to discuss with you, number one, what is Nasdaq 100 index? Number two, the difference between US based ETF and Indian based ETF investing in Nasdaq 100 index. Let me now give you a 30-second crash course on what is a Nasdaq 100 index. Okay, so you see Nasdaq 100 is an index that basically tracks top 100 companies listed on Nasdaq exchange. Now there are more than 3,300 companies listed on Nasdaq exchange. How does Nasdaq 100 picks up those 100 companies? That is simply by market cap. Okay, so higher the market cap of a company, then the chances are they will appear in here. So top 100. So for example here, Apple right now has the highest market capitalization. That's why it is number one. Number two is Microsoft, Amazon, likewise. Okay, now if you look at the weightage here, right, depending on the market cap, the Nasdaq 100 will also assign the weightage, right? So Apple has got 12.42% is of weightage on the Nasdaq 100. If Apple does well, Nasdaq 100 is going to do well. If you look at the sectoral distribution here, technology contributes to 51% of Nasdaq 100 because they have naturally appeared on the top 100 list because of their market cap. And market cap, what I mean by market cap simply is the number of shares issued multiplied by the price of one share, right? There are two types of ETFs that I'm going to talk about and I'm going to explain to you very simply, okay? Number one is US based ETF, okay? So imagine you've got Nasdaq 100 companies here listed, right? 1 to 100, say Apple, Microsoft, Amazon, and so on, right? Now let us say, if we talk about the US based ETF first, example of that will be Invesco QQQ Trust Series 1. This is one of the best ETFs in the whole world, not just from a Nasdaq perspective, but overall, right? So the way it works is, let us say that this Invesco QQQ Trust Series 1 ETF, it will have $100 in its fund, okay, just for the simplicity. There will be a fund manager here. Okay, this fund manager, what they will do is they will take this $100. Where will this $100 come from? It'll come from retail investors. So for example, an Indian can put money into this, okay? Or a US citizen can put money into it. But in order for us to put money into this fund, we have to put the money in US dollars. Okay, let's understand this. So let us say there is a retail investor here sitting in US. They will pour money into it using the US dollar. Okay, if an Indian want to invest in this fund, what they will have to do? They will have to send their rupees, okay, their rupees into this fund, and there will be a conversion here into the US dollar. Ultimately, this fund will contain USD, right? So far, this is clear. Now, what they will do is this fund manager will go ahead and invest this money and buy the shares of Apple, Microsoft, Amazon, in the same ratio as the Nasdaq 100 has in terms of the weightage. So for example, Apple's weightage is, let's say 12%. They will go ahead and buy 12% of the Apple stock as per this weightage, right? This is how the US fund will work. Now the difference, so this would have been an index fund, right? But the difference between index and ETF is that, let us say there are 100 units of this fund, okay? So let us say two of the investors have invested in this and each of them have got 50 units, right? Now this fund is also listed on Nasdaq exchange as a tradable equity, right? So we can go ahead and buy and sell this particular unit that will give us indirect access to these stocks. That is the big difference between ETF and a mutual fund or an index fund, right? They're tracking the index fund, but they're also getting traded on Nasdaq exchange in this example, right? So the price of this, you can go ahead and buy these units using the Nasdaq. You don't need to wait for the day end to happen and then the NAV gets decided. The second category of the ETF that I want to talk about is Indian based ETF, right? Indian-based ETFs investing in Nasdaq 100, right? Good example of this is Motilal Oswal Nasdaq 100 fund. Okay, you go and have a look at that. I'm going to talk about it in a minute. But in this case, what happens is the fund is set up in rupees. Okay, the fund is set up in rupees, but this rupees then gets converted into dollars. Okay, so as an Indian investor here, you can directly invest in this fund into rupees, and that will get converted in US dollars, and those US dollars will then go ahead and buy these stocks, and this is how this fund works. But the big difference here is that this fund here is listed on National Stock Exchange. So this is listed on Indian exchange, and you can go ahead and buy and sell the units of this fund, which will give you indirect access to these companies' stock. You don't need to convert your money from rupees to dollars. You only buy it in rupees, and this fund will go ahead and in turn invest this rupee into this fund by converting into US dollar. I hope this difference is very clear, and these two are the best performing ETFs when it comes to Nasdaq 100. I hope you liked this video. If you did, give it a thumbs up and subscribe to this YouTube channel, because I will bring more powerful finance and career related video on this channel. Until then, see you. Have a good day. Signing off.